back with Markets at Noon, and we've got a very positive development coming in for Morepen Labs. They have commenced a part of their CDMO order worth 850 crore rupees. So let's get a better sense on that. And what is the outlook for the remaining of the order? What is the timeline over there? We've got the management joining us on the show, Mr. Sushil Suri, the chairman and managing director of Morepen Labs. Mr. Suri, hi, good afternoon, and thank you so much for your time. Give us a sense now that commercial supply has begun for your 825 crore rupee order. Can you share some more insights into the specifics here, and what therapeutic areas or molecule classes do these CDMO mandates cover?
Thank you, Neha. Thank you for giving us this opportunity. Basically, as we communicated back in the February that we have got a big order of almost 825 crore, which is almost equivalent to our full year revenue for the API business. Whatever we achieved in the last 40 years, this single order mandate was there. So, of course, there was a lot of responsibility, regulatory, compliance, quality standards, and of course, process validation, audits. So, thankfully, the team has done a wonderful job. So, we have started the commercial supplies after moving from validation and processes stage. So, from paper stage, we have moved to the commercial. Actual invoicing has been done, and the shipments which were supposed to start in the Q2, so we have been able to prepone, or I would say a little ahead of schedule. We have given some shipments, so that gives the comfort to the customers, and of course based on the customer's requirement. So second major thing here is that we have got 15 months time to complete the order from start, say from this, say 30th June onward. So technically we have almost 12 months more. But the team is confident, and we are very comfortable that we are trying to complete the order much earlier than the 12, 15 months time what is allotted to us. So we are expecting that another 225 crores, 200 to 225 crores orders will be able to execute in Q2, which totally including Q1 and Q2 will be around 275 crore, which is a big thing to begin with. So that's a macro thing. So in case there's anything specific, I'm happy to reply.
Okay, sure. No, that sounds good, and thanks for sharing with us that broader timeline. Mr. Suri, it's Nehi over here. Let's talk about your capacity in place to supply this order. How much headroom for capacity ramp up you have without going into further capex spend, and what is going to be the timeline for the 1,000 kiloliter scale up that you have outlined in your capex plan?
Capacity build up, of course, is going in a phased manner. So we have 500 plus KL at the beginning of the year. And of course, we were already working for 600 KL, which we have fully allocated towards this new mandate. So as you would appreciate that we already have an existing business, which is our core business. So this CDMO is a strategic move for which we have to build extra capacities. So what we are trying to do is that we are trying to do a little bit of pruning of the existing pipeline in the first and second quarters. By end of Q2, we will have 600 KL capacity ready. And then we want to go to 800 KL, for which the planning is already in place, and we have approvals for the project also in place. So the third phase, of course, will be 1000 KL, which will be by within FY27. But by Q1 of FY27, we want to finish 800 KL. So that's on plan. So as we stand today, we have supplied this first 50 crore order without any additional capacities, just by accommodating our existing product line. And the good point is that the team has been able to do a wonderful job that from the existing supplies, we have been able to, existing capacities, we have been able to supply this. But once we build large capacities, the customer gets more confidence, more comfort, because customer is always looking for so-called surplus capacities. So till the time we do not have surplus capacities and we do not show our execution, so we have the customer doesn't get a confidence. Now we have supplied and we are building capacities also, so we see a large headroom in getting new orders also.
Okay, that sounds really optimistic. Mr. Suri, I understand in terms of your guidance, you're looking to clock in around 11 to 12% EBITDA in terms of the guidance. And of course, your near-term target is 15%. While I understand you cannot be sharing specific numbers at this point with us, can you give us an indication if the Q1 margins or even your broader outlook for FY27 is going to be in the ballpark range of these numbers?
I would say that we are working for better quality products, better productivity margins, and better, I would say, product mix, which will certainly have better margins. I obviously will not be able to give a direct guidance. But one thing which you have to appreciate is that traditional APIs have been ranging in the between 8 to 10% for the company for the long period. But most of the large pharma companies, CDMO margins are much higher. So we are looking that year as a whole, the blended margin should be in mid-teens or mid-teen to high teens. So which will be or very should be very good from our investor perspective. But as we go, it's very guided, very controlled. The present focus is on execution, present focus is on supplies, present focus is on compliance and regulatory. But once we are able to establish these basic things, which is the trust of the customer, new customers, I don't think profitability should be an issue and margin should not be an issue. We are slowly scaling it up in a very guarded manner.
And on that, given that backdrop, your FY30 target revenue of 5,000 crore rupees, I believe you are on track for that.
Yes, for that matter, it remains on track. So when we had given that target, so we were already in some discussion, but obviously there was no closure. So now we can see the light of the day. For group as a whole, 3,000 crore and FY30 is seemingly very close what we are.
Okay. Any chance you'll be able to clock that number before FY30?
Too early to say, but
Sure.
we all wish. We all wish.
Sure, sure. And lastly, Mr. Suri, can you give me what your product mix between medical devices and now the CDMO opportunity, how is that going to shape up your overall top line in the near future? What is the mix going to look like?
Look, medical devices, of course, would be always sit in a separate company, and the decision is already on cards. So now, the focus, Morepen as a parent company, I would say I can give you division between API and CDMO. So within this first quarter only, with this 50 crore dispatch, so CDMO is already 10 to 15% of the total revenue for the quarter. And going forward between API and CDMO, the target is that CDMO should become 50 to 60% of the business, and API will remain 40 to 45% of the business in the next 2 years' time. So the company is undergoing a big transformation, where the whole focus is going for long-term supply contracts, committed supplies, better visibility, better costing. So that's, I would say, between API and CDMO. Medical devices have its own growth plans. So, and you would see in near future the medical devices is growing a pretty, I would say, at a comfortable level, 15 to 20%.
Okay, so CDMO to become 40 to 50% of the business in 2 years, right?
That's right.
Okay, sounding good. On that note, thank you so much for your time, Mr. Suri. So good to be chatting with you today.
Pleasure.
Thank you so much. So viewers, that was the management of Morepen Labs and talking about their FY27 and near-term growth plans. With that, we're completely timed out on this edition of Markets at Noon. Thanks so much for watching. But keep watching it, all about your companies up next.